Hello and welcome to the SME Champion Awards. I'm Shereen Bhan and we're in conversation with HSBC's Hitendra Dave. Hitendra, always a pleasure. Thanks so much for joining us here on this very special program. You know, there's a reason why we're calling it Builders of the Economy, because that is really the contribution of the Indian SME. Whether you look at it from a manufacturing perspective, a services perspective, a trade perspective, an export perspective, a job creation perspective, their contribution is significant, but perhaps somewhat underappreciated.
Yeah, well, that's why we are doing this program, right? That's why we are doing these events. That's why we are doing this felicitation ceremonies, because I think whichever way you look at it, I think, if we go from the $3.5 trillion to 5, 10, and, whatever in 2047, I don't think anybody thinks we will achieve that without having a thriving and a much larger SME sector, because this sector will play a critical role in not just producing goods and services for selling to the domestic markets, but in a much bigger way, produce goods and services to sell to the global markets. Right. I think the desire to achieve this $20 to $30 trillion GDP, in whichever shape and way you cast it, will not happen unless SMEs are a very large part of the production and service economy. And therefore, I think for us to get together and to say, identify the champions who build the economy, build the industry, I think is very critical, and we're very happy to be part of it.
And that brings me to the question of scale, because of course the aspiration is to build out a larger ecosystem of SMEs, but it's also to enable these small and medium enterprises to become industries of scale, to become organizations of scale. And that's what I want to understand from you. What do you believe are the stumbling blocks get in the way?
So I think, it's a complex issue. It's not that people don't want to lend to SMEs or don't want to invest in SMEs, but like any normal lender or investor, you need to see paper which makes sense, right? So I think that's one part, that some of that is progressing. You can see, since you asked me where do we stand, right? I mean, you've seen government policies on payment discipline as a part of the government marketplace platforms, right? You've seen this Udyam portal, right? Yeah. Once it's a relatively easy way to register yourself, disclose your turnover, disclose your investment in plant and machinery, etc., etc. And that certificate is seen as a great source of comfort by the lenders, Absolutely. Banks like ours. I think on the other part, I would say most SMEs will have to take a business, do they produce for the end consumer directly, right? Which is a very difficult journey from a branding, marketing, distribution perspective. It remains relatively modest size. Or do you say, I will become part of a supply chain of a much larger conglomerate? Typically, you will find our experiences that the second or third order of the supply chain tends to be SME. So I think what they need to do to get into this supply chain from a product, from a labor practices, from a wage practices, from a ESG perspective, you do have now, for example, in Europe, the adjustment mechanism coming in. Yeah. It's a threat. But since we are such a small part of the supply chains, actually it's an opportunity for our SMEs to get their act together, use this time that you have in the next 18 months to actually replace some of the existing suppliers. So I think the opportunity is very large. As with everything else, there'll be the champions or the winners.
Let's speak about that in the context of India trying to integrate itself into the global supply chain. Because at this point in time, the hypothesis is that people are looking at diversifying the supply base. People want to have a China plus one strategy, and India is a likely beneficiary of that. So in the conversations that you're having, which are the sectors that you believe are poised to take advantage of the circumstances that present themselves?
I would think autos clearly is a leader there. We are already, but again, auto is such a huge economy, right? I mean, we are part of some, but in the grander scheme of things, you could go 5x and still be there, right? Similarly, in anything in the new economy space, right? Because these are sectors where you will have large enough domestic demand, right? Anything in the solar, the battery, the EV, right now we are not there. Therefore, there will be some companies which will start their businesses here and they'll need the supply chains here. So, but these are new economy sectors, they are new age sectors. We will have to therefore have SMEs which are also technologically thinking of that nature. Yeah. But I see broadly the way I see it, I think supply chains will, the big companies will come here for the domestic market. and for the West home markets of the West.
Let's talk about the consumption story. And that is, of course, one of the biggest bets that people are making on India. And the role that you believe that Indian SMEs can play there, especially in this D2C world, in an e-commerce driven world with e-commerce playing a big growth engine. What do you believe will be the role and relevance of the Indian SME in this environment from a consumption perspective?
If the Indian consumer market grows, and I shouldn't say if, it is a journey which we're in the part of, and as the 5-6 crore very large consumers we have becomes, let's say, 10-12 crores in the next 4-5 years, and then 20-25 crores in the next 10 years or so, these are continental sized economies we'll be creating. As continental sized economies create and we start consuming more milk or chocolate or soap or whatever else, the entire ecosystem will have to grow proportionately. So therefore, the opportunity for SMEs to be part of this, and again, not just in the manufacturing supply chain, but even in the distribution, right? That you need a stockist, and you need a dealer, and you need a distributor, and you need a last mile delivery channel to be available. So the consumer side that will be a very domestic side story, but everyone is excited about that. I think everyone has seen the data on what's happening with Indian consumption in certain items, right? You can see it's like doubled, tripled, or quadrupled in the last 10 years or so. So as the wealth effect takes place, as rising incomes take place, I guess opportunity here as well.
Well, speaking of opportunities, let me ask you specifically from the bank's point of view, and you listed out reasons why there is more confidence today than previously to lend to the SME sector on the back of better reporting, disclosure, access to data, and so on and so forth. What's the aspiration for you as far as this ecosystem is concerned?
That we hope only we can do. I mean, just for context, HSBC is the world's largest trade bank, right? So we know how people do exports and imports across 70 markets and across all kinds of jurisdictions. I mean, just to give a little example, let's stick to the nut and bolt example that we have. Let's say if you're a manufacturer of nuts here and you find a buyer, or a bolt here and you're finding a buyer, let's say in Mexico, you have zero idea of the credit worthiness or the repayment track record of that buyer there. The ones you're exporting to, right? But as a trade bank, we will have access to lots of databases, which will give us a sense of whether that counterparty is credit worthy or not. We can also know which other sellers sell to that counterparty. We can also know which other buyers in that market buy a similar product from other counterparties. We can see from the customs data of those countries what are the price point at which the goods are, because this is all official data. This is all using this. We are never going to share privileged information, right? But because we are such a large trade bank, we will have built-in systems and processes and data gathering and data analysis tools to share this. This is something which only a bank like ours, with its globality and its emphasis on trade, will do. And that's where I think you find that a lot of, especially aspirational small businesses, people who want to tap or access the global market, do actually come to us and say, yes, there are things which we do locally where we understand that you might play a role, might not play a role. But in this one, we can clearly see not only can you play a role, you can help us grow much more faster in a much more sustainable way.
So outside of the aspiration to become the conduit to help the Indian SME go global, what has been the experience of actually being able to do that with the portfolio that you currently have? What have been the big lessons to take away? What have been the big learnings that you believe, if executed at scale, this pipeline can become far bigger?
I think the market outside India is waiting for Indian companies, small companies or big companies, to establish quality norms, reassure on supply consistency. Supply consistency has become very, very important, right? Make sure that your manufacturing practices are following global best practices, your employment practices, your affluent treatment practices, your focus on climate and carbon emission and things like that. So what we experience right now, or what we see right now, is that those companies, every month we see 2-3 break out and become really a part of the global chain, right? And then you can see they double or triple literally every 2-3 years. So but it's
so what is the size that we're talking about? Since you're talking about doubling and tripling of every few years, and quantify a breakout moment in the life of an SME for me, in what you're seeing today.
My guess is 100 crores. I think at that stage, the founder, the family member starts to realize the benefits of everything that I've described. You can do 100 crore business, up to 100 crore, do it informally, do it with friends and family. restrict yourself, including the books and all those things. But I think a lot of people realize beyond that, that frankly, you could get to 1,000 or 5,000 within your lifetime. And therefore, the shareholder contribution, even after reinvesting in the business, even after investing in the research and development, even after starting to pay wages which are way higher than what you would normally expect to pay, including having proper supervised and skilled staff. I think it's that level at which we notice.
When we talk about small and medium enterprises, but, outside of the issues related to ownership and management and shareholding and professional management, compliance. And you've spoken about the need for better compliance, the need for global standards, the need to benchmark yourself to what's happening around the world, etc. But is it easier for the Indian SME today to be able to grow?
We do have a plethora of laws and regulations to comply with. Historically, many people have managed that system and therefore remained below the radar, small-sized, just catered to a well-defined market and a well-defined channel. But hopefully through initiatives such as this, we do highlight that it's worth it. You cannot go from 100 to 1,000 by managing the system, right? You will have to comply with the system. You will have to hire external people on everything, whether it's labor laws, whether it's taxation laws, whether it's compliance with affluent treatment, general good focus on good manufacturing, R&D. You will have to hire outside engineers to look into your processes and things of that nature. But it is tough. But I think as success stories go around and as younger lots come in to the point on those younger members of the family who choose to sort of take over, you can see that people are seeing that it's worth it.
Well, let me understand from you what you see for yourself at the bank over the next few years in terms of whether it's supply chain financing or the SME book. I mean, what's the aspiration? Do you have a target?
So from our perspective, overall India is a growth market. We are experiencing good tailwinds. Hopefully those tailwinds will continue. Hopefully some of the tailwinds are because of work done by us and not just external things. Within that, if you want to be a contributor to the Indian economy, contributor to the Indian corporate sector, I don't think we want to operate in a bubble, just deal with some 50 large companies and leave it at that. We want to be a player. We want to be somebody whom SMEs can come to, or startups. I think I must mention on startups, I think we have a $250 million lending fund for startups. Very few, even domestic banks do so. This is pure lending to SME, right? We bank some 1,800 odd startups. We bank 45% of the unicorns in the country. We also bank 45% of the multinationals that are in the country. So this is two ends of
the spectrum.
So that hopefully suggests to you what we want to do here. We will bank SMEs. We will do a lot to help them grow. We can see the areas that we can do the best is really helping them navigate global markets largely because of the factors that I mentioned earlier. But we will definitely be part of domestic supply chains. Those domestic supply chains will be anchored around the corporates that we know. And hopefully we, through our technology, through our awareness of trade practices, through generally being the world's largest trade bank, can help ourselves, but more importantly, equally importantly, help our customers to grow and participate in the great story that India offers all of us.
Since you have your fingers in both sides, the large conglomerates and the large businesses, as well as India's booming startup ecosystem, which has gone through its degree of pain over the last 2 years and its funding winter as well. Let me get a pulse check from you. Is there a convergence in mood, or which side is feeling better today?
No, I think it's very apparent in the data on everything that you read, right? That the big and the successful and the wealthy are in a very different mood music territory, right? You see jewelry sales in this month, you see
luxury homes,
luxury homes,
cars.
you see number of passengers who flew on the day before the World Cup final, right? The highest ever. I think coming to either the startup or the small and medium, I think there it's very mixed. Okay, there are some startups, despite the fund, because their product they've got right, the disruption they've caused is real, and therefore they are rapidly acquiring customers. On the other hand, in SME, I think those that have latched onto supply chains and have quickly been there to react to this China plus one or supply chain diversification, I think when we meet people, and sometimes we meet them formally or informally or whatever, Some of the confident ones are very confident that in the next 10 years, they're going to be no longer be an SME. They won't be there when we do the SME awards or SME recognition of 2028. They will be in the upper category.
In the big league, so to speak. But you talked about what's driving the high end of the market, the luxury sales that we just talked about, sector across sector. The premium category clearly continues to evince interest. What's fueling that, and how much is that linked to the fact that the Indian equity markets have also been on a tear for the last few years?
I think we voted with our foot, right? We bought a mutual fund exactly a year back, exactly because we believe that this is an irreversible trend. And since you asked me what's the drivers of it, I think one is the social part, but the other is very clear through the employment channel. The high-end employment market, people who get paid 300,000 rupees a month, 400,000 rupees a month, where after your consumption, there's significant amount of disposable income still left. That I think is growing at a faster pace than normal employment.
But from an expansion and investment point of view, to the companies that you are in conversation with, where do you actually see the fact that they are adding capacity, or they feel the need to start to add capacity where utilization rates are perhaps now at 75-80%?
I think we all come from a background, because this question gets asked literally every 3 months. Why is the private sector not investing? Why aren't we seeing those big projects that we used to hear about in 2011, 12, 13? And I generally see that was a bad expansion. So let's not want that, or let's not hope for that again. So I think that's one part, that if you're looking for that, I am not a big fan of it. And I don't think it's needed also, because you need to be realistic about where those $10-15 billion. If you want to do $10-15 billion, bring $5 billion of equity. You can't bring it with $200 million of equity, right? So that's one. I think on the second part, I think we also must remember that there's been fair amount of consolidation in many sectors, right? So if you've just acquired a steel mill that wasn't working or was more or less had become defunct, that's capacity added, but it's not added it's added at a production level, but it's not added at a project announcement level. Similarly, in cement, you see the number of companies that were there, say 7 years back to versus it is today. So, more cement is being produced, more steel is being produced, but it's being produced by less number of players, and therefore those green fields are not taking place. But you can see, right, in areas we mentioned about power growing at about 9%. Eventually we'll need more power, and you're already beginning to see talk of not just the renewable, which we've heard for the last 3-4 years, but increasingly that we will need to revive the thermal power plants as well. So I think you will see it happen, but I think that the difference this time will be equity will have to precede debt. So yes.
Well, that certainly is the hope. But, since we're talking about consolidation, and we've seen a fair degree of consolidation, as you rightly pointed out, across different sectors, especially in the large spaces. But what about the appetite, the M&A appetite for SMEs at this point in time, both domestic as well perhaps global, since they are looking at integrating into the global supply chain?
Maybe not in the SME, maybe the M++ part. You've definitely seen Indian companies acquire, right? If you sort of just go through the last 100 acquisitions made by Indian companies, a lot of them by not the gigantic corporations. They are by more the mid++ corporations. Many of them are acquiring, as based on at least the discussions we have, for the customer access, so therefore the distribution, or for the technology, right? It's really for these two things, because they then can transport that back into their home markets here and really improve quite dramatically.
Let me end then by asking you, to your mind, what would embody an SME champion for you today?
I hope through this process, the ones we identify as the winner or the champion, clearly I think prioritizing technology and R&D would be one. I think wanting to work with global supply chains and global corporations so that you improve regularly. Because the customer makes you improve, the end customer makes you improve. Certainly, I think practices on manufacturing and labor. I think this is what will distinguish, right?
So remember, this is your opportunity, this is your chance also to participate in the CNBC TV18 HSBC SME Champion Awards. Hitendra, it's always a pleasure. Many thanks for joining us, and we look forward to hearing more from you, and of course also being able to showcase what's good at this point in time in the Indian SME ecosystem, and qualities that will be highlighted through the course of this campaign. Always a pleasure. Appreciate your time.
Thank you, Shri.
Well, that's it then on this edition of the CNBC TV 18 HSBC SME Champion Awards, the builders of the economy. We'll see you again with a lot more from this space. Keep watching.